You have looked into this. You have an analysis, actually. You're not just picking things out of the air about what you think is going on right now. Let's start with the so-called Trump rally. We had one last time, back in 2016. You think we're in one right now?
Well, we finance people are simple. In 2016, the market crashed on election eve and then took off for 3-4 weeks after that, had a big run. So, Pavlovian, the investors are anchoring to November 5th, the 2024, on what a Trump win could mean. And they're generally market-friendly policies.
What are those policies? Are we talking about taxes and regulation mainly?
Yeah, so the Trump tax cuts expire in the 2025, so presumably those would be reinstated and extended. Light touch regulation, energy independence, and I think the market thinks under Trump 2 that the international situation would calm down a bit.
Well, talking about international situation, before you talk about geopolitics, what about trade? Because we've had him come out now and say, this is former President Trump saying 10% tariffs across the board, and Robert Lighthizer, his advisor, has written a book that says we'll start at 10% and then just keep ratcheting it up until we eliminate trade deficits.
Right, well, I have a contrary view, or a differentiated view on that. I actually think that they're putting the gun on the table with the notion of not having to fire it. That's how you start a negotiation. You go to the most extreme position, and the world's already falling for it. Christian Lagarde came out, president of the ECB, came out last week and said almost assuredly if Donald Trump comes back, he will put tariffs on Europe. So without having done anything, he's in a strong negotiating position.
But do we want tariffs on Europe, or is that going to hurt our economy?
I think that we don't know. So what will tariffs be? Tariffs are inflationary. They tend to strengthen the dollar, but it's good for domestic industry.
So you say the market is discounting the likelihood or quite distinct possibility that Donald Trump will come back, and we saw it worked well the last time. But also, is the economy getting a little bit of help from the current administration?
Well, so my thesis that this is a Trump rally is two parts. So market anchoring on Trump is ahead in the polls, victory November 5th, but Janet Yellen's also looking at that polls. So David, since 1952, the market has never had a down year when an incumbent's running. Never had a down year. And why is that? Because the economic apparatus in the White House is pumping away. So providing a lot of liquidity, spending a lot of money, releasing a lot of the programs that were passed last year, maybe they've delayed. So, they're trying to reach some kind of crescendo this summer, and the market likes that. So, I would say right now, this is a nirvana situation for the market. Trump's ahead in the polls, market's anchoring on November 5th, and Yellen sees the same polls, and she's pumping away as hard as she can.
Scott, one of the things I found fascinating in your note was you have a chart in there that basically tracks where the S&P 500 is gaining versus where Trump is versus Biden in the polls, which is pretty stunning. It tends to say the more Trump gets ahead in the polls, the better the market does, and when Biden gets ahead in the polls, it's flat or even a little bit down.
Yep, so that's correct. I did put the normal disclaimers. There are not a lot of episodes, not a lot of observations. There's a lot of serial correlation in there, but directionally, I think it's correct. And the magnitude, as you said, is quite big. On periods when Trump is up, we've had a cumulative gain of 35%. Periods when Biden's up, it's 3%.
Finally, you also refer to the Fed in your note, and I wonder what role the Fed may play here. I mean, people speculate, they don't want to do anything just before the election, or they just want to make sure they don't go into recession. What do you think? Is the Fed paying any attention to this? We believe that they are non-political, right?
I don't believe that. Look, everyone has, the Treasury has an explicit agenda. I think you could say the Fed has an implicit bias, that they're mostly based in D.C., 91% of the people in D.C. vote Democrat, so they do have an implicit bias. And Jerome Powell's made no mistake that he probably wants to be reappointed. Donald Trump has said he would not reappoint him. So, there's a bias there. It may not be as overt as Treasury, but there's a bias.
But if that's right, Scott, does that mean we should expect more cuts than we might otherwise think? Because I assume the way to make sure we don't go into recession is cut more.
Well, I'm not sure why we're going to cut in the first place. Inflation will be down, markets are buoyant, economy is quite good, spending's high. So, and given this Fed's record, I'm not sure why they wouldn't take out a lot of insurance to make sure that inflation is under control. That, we're at 3.7% unemployment. Why are we cutting?